Millionaires and billionaires have been using these tax strategies for decades. Their accountants know about them, their financial advisors know about them, but nobody is talking about them in plain English for regular people. Until today. I'm Paulette Foster with PRF Tax Service, and today I am breaking down the legal tax strategies that wealthy people use to zero out their tax liability and exactly how freelancers, gig workers, and small business owners can use the same strategies right now. Let's get into it. Before I get into the strategies, I want to say this clearly. None of what I'm about to share is illegal. These are not shady tricks. These are strategies that are written directly into the tax code. The wealthy just have accountants who know where to look. Today, you are going to know where to look too. Strategy number one, the Augusta rule. This one sounds almost too good to be true, but it is completely real. The Augusta Rule, officially known as Section 280A of the Tax Code, allows homeowners to rent their home for up to 14 days per year completely tax free. The rental income does not have to be reported at all. Here is how business owners use it. If you own a business, even a sole proprietorship or an LLC, you can rent your home to your own business for meetings, retreats, or events. Your business pays you rent for up to 14 days. Your business deducts that rental expense, and you, as the homeowner, receive that rental income completely tax free. The key is that the rental rate has to be reasonable and comparable to what a similar venue would charge in your area. Document it. Write up a rental agreement. Have your business cut you a check. Keep the records. For a lot of self employed people, this is an extra $2,000 to $5,000 or more in tax free income every single year. Strategy number two, hire your children. If you have a minor child and you run a sole proprietorship or a partnership where both partners are the parents, you can hire your child to work in your business and pay them a legitimate wage. Here is why this is powerful. Your child's standard deduction for 2023 is $13,850. That means they can earn up to $13,850 in wages from your business completely tax free at the federal level. And if they are under 18 working for a parent's sole proprietorship, they are also exempt from Social Security and Medicare taxes. You deduct the wages as a business expense. Your child pays zero tax on the income up to the standard deduction amount. And if you put that money into a Roth IRA for them, you are building their retirement tax free at the same time. The work has to be real. Document it. Pay a reasonable wage for the actual work performed. Keep records of what they did and when. But this is a completely legal strategy that wealthy business owners use all the time. Strategy number three, the backdoor Roth IRA. High income earners are not allowed to contribute directly to a Roth IRA because of income limits. So, what do? They use the back door. Here's how it works. You contribute money to a traditional IRA, which has no income limit for contributions. Then you convert that traditional IRA to a Roth IRA. The conversion is taxable, but once the money is in the Roth, it grows completely tax free forever, and you never pay taxes on it again. For self employed people, this is an incredibly powerful long term strategy, especially when combined with a SEP IRA or Solo 401k to reduce your current year taxes. The backdoor Roth builds tax free wealth for the future. Strategy number four, bonus depreciation and Section 179. This one is huge for self employed people who buy equipment, vehicles, or technology for their business. Normally, when you buy a business asset, you depreciate it over several years, deducting a portion of the cost each year. But Section 179 and bonus depreciation allow you to deduct the full cost of qualifying business assets in the year you buy them. That means if you buy a $10,000 computer setup, a camera system, a vehicle used for business, or any other qualifying equipment, you may be able to deduct the entire purchase price in year one instead of spreading it out over 5 or 7 years. Wealthy business owners use this aggressively every single year to reduce their taxable income, and it is available to every self employed person who buys qualifying business assets. Strategy number five, charitable contributions through a donor advised fund. This one is for the self employed person who gives to charity and wants to maximize the tax benefit. A donor advised fund, or DAF, allows you to contribute a large lump sum to the fund in 1 year. Take the full tax deduction in that year and then distribute the money to your chosen charities over time. Here is why wealthy people love this. In a high income year, they dump a large amount into the DAF, get a massive deduction that year, and then give to charity over the next several years. They get the tax benefit all at once, but the giving happens gradually. For a self employed person who has a great income year, this is a powerful way to both reduce your tax bill and give to causes you care about. Now, let me bring this back to you specifically. You do not need to be a millionaire to use these strategies. You need to be informed and you need to keep good records. The Augusta rule works for someone with a home based business making $60,000 a year. Hiring your child works for a solo freelancer with kids. Bonus depreciation works for a content creator who buys equipment. The backdoor Roth works for anyone who wants to build tax free wealth. The difference between the wealthy and everyone else is not that these strategies exist only for rich people. The difference is that wealthy people know about them and use them consistently. Now you know. If you want to make sure you are capturing every deduction and strategy available to you, grab my free tax savings checklist. It covers the most commonly missed deductions for freelancers, gig workers, and small business owners. It is free, and the link is in the description. And if you want to sit down and map out which of these strategies apply to your specific situation, book a free 15-minute consultation with me, also in the description. I'm Paulette Foster with PRF Tax Service. New videos every Tuesday and Thursday. Subscribe so you don't miss the next one, and I'll see you then.